So one of the big things for everybody to know, as a consumer, one of your rights as the consumer is to request a copy of the policy you're being quoted. So anybody can call the agent they got a quote from or call the number on the top of the quote for the carrier and request a full copy of that policy. And that's how you're going to start and go through this. Now, the other thing I like to tell folks is the first time, if you want to read that cover to cover, I highly encourage it. The first time you read it, you are going to be brain dead. The second time you read it, it starts making sense. By the time the third time you read that, you will probably know more about that insurance contract than the person selling it to you.
Welcome to Short-Term Rental Solutions, a show for hosts and property managers looking to overcome obstacles, maximize revenue, and optimize their short-term rental business by learning from the innovators who are designing the solutions that are shaping our industry. Hey everybody, welcome back to the Short-Term Rental Solutions Show. I am your host, Christiane Crump, and appreciate you taking some time out of your day to join us. We are going to be talking about insurance and how to help you learn how to shop for insurance for your short-term rental properties like a pro. There are so many things that go into making sure that you have the right policy to keep your property protected and yourself protected. And it seems like an area where people know just enough to be dangerous, but there's really so much more education that can be provided to help people have confidence to know that their properties are well taken care of and that they are also protected as well. So we are really lucky to have Nick Massey from ProperInsurance with us today. Nick, thank you so much for joining us today on the show.
Oh, absolutely. Thanks for having me. Looking forward to dropping some knowledge and helping people out.
Yeah. So, Nick, give us a little bit of background on you, how you found yourself in the insurance industry, and then here at Proper.
Yeah. So my background is long, but after working construction for a time and grew up in a construction family, I was kind of told by a friend's dad that thinks I'd be good in this industry, and so really went through kind of the personal line side of things, your standard, State Farm, Farmers, stuff like that. Um, I found myself really gravitating towards niche insurance products. I worked in marine cargo insurance and importing bonds for a little bit, then moved into estate planning, life and health services for farm and ranchers out here in Montana. That required a ton of travel. And then, like most people in short-term rentals, I kind of fell into it. So, being on the insurance side, ProperInsurance was looking for established professionals and jumped on board and found my way into the director role. And so here we are, almost 9 years later, uh, you know, running how insurance needs to be handled in the short-term rental space. So it's been a wild ride. It's been a lot of fun growing with the company and growing with our clients and growing with the industry. Insurance is usually slow and boring, and we're able to be very nimble and adapt as the industry adapts very quickly, which makes it an exciting facet of insurance versus the general boring end.
Yeah, well, I'm going to nerd out with you here because um, I actually feel like this is a part of our business that a lot of people just kind of gloss over really quickly. But I feel like there's so many interesting things that we can talk about as far as insurance. And I'm not even kidding when I say interesting things that as Nick and I were talking about this, preparing for this show, I felt like it was more than we could adequately cover in just one episode. So we're going to focus today mostly on the concept of how you go about shopping for insurance with your properties. And then we're going to break this up and have a second part of the conversation with him that'll follow the following week. And then we're going to be talking about really the nuances of short-term rental coverage. And because there's all sorts of specialty coverages and different things that you can kind of add on that are not found in regular homeowners type policies. And so I really felt like it wouldn't do it justice if we glossed over that. So we're gonna, like I said, have a particular episode first here, really helping us get educated on how to shop for policies. And then we're going to have another conversation where we educate you on the types of things types of coverages that you can get for your short-term rental property. So then you can really know, based on where your property is and the features and amenities and different types of things that it has, really what you should be looking for or could consider getting coverage for to help you with your short-term rental property. So I hope you're as excited about that as I was when I started learning about this. I know you're going to learn a ton as you stay with us and follow along with this conversation that Nick and I are going to have. So let's just jump right in, Nick. Here I am, a short-term rental property owner, and either I have a brand new property that I'm putting into service, or it's just that time of year where my policy is getting close to renewing, and I'm really deciding whether I'm going to renew with my current provider or look at getting coverage from another potential provider. Where should we be starting that journey?
Yeah, I mean, like most folks, we're going to hit the internet. You start typing in keywords, short-term rental insurance, insurance for Airbnb, insurance for VRBO, things like that. And Google's going to give you a ton of options, right? A lot of us already have an established agent relationship with a local agency. So we're going to pick up the phone and talk to them. And that's really the beginning of the journey of shopping for insurance. But um, I will say as we get into this, most folks kind of stop there. They don't really dive too far in, which is why we're having this conversation on what to be on the lookout for while you're shopping. You're not calling and getting an auto insurance quote. You're not calling and getting just a regular homeowner's insurance quote. There's a lot more things you need to be aware of and ask, the right types of questions to make sure you're getting quoted correctly for your exposure.
Absolutely. And when you're running a short-term rental property, it's a business. So the types of coverages that businesses need is entirely different. But, as I've done this, I've had properties in service for a number of years that we personally own. I find that more often than not, when I'm calling and getting a couple of quotes, the first thing that they send me is just like a summary page. It's like a one pager that just says, this is the amount of dwelling coverage. This is the amount of liability coverage. There's really not a lot to it. And in
Mhm.
my personal opinion, that is not enough to make a buying decision when it comes to an insurance policy.
Yeah, and that's absolutely the truth. So, I mean, historically, you say you need a quote and you send them the property address, and then the agent puts it in the system, and then the system spits out a number and it spits out a quote and they email it to you. And it's like you said, it's one or two pages and it only shows you limits of insurance and then it tells you how much it costs. It is not telling you what that contract is going to do. And that's where we need to shift our mindset in shopping for insurance around short-term rentals is you need to go beyond the two-page quote. You need to be looking at the actual contract details. Um, okay, I have an X limit of insurance to replace my house if there's damage. What is actually covered? What are my limitations? What aren't my limitations? What are my exclusions? Things like that. And that's all stuff we need to dive in more and learn what these basic terminologies are. So when you're on the front end shopping, you have a general idea of what these terms actually mean and what they're providing you from a risk management standpoint.
Yeah. And like I said, the last time that I kind of went around this block, I did just that. They sent me that summary and I said, hey, before I feel confident in signing and binding this policy, I would love to get a chance to look at kind of the details of what this policy includes. And I don't think many people ask that when they're getting
Mm-mm.
quotes because it took me a day or two before they actually emailed me all of that. I don't know where it comes from in the bowels of the insurance company, but it wasn't right on the tip of, it wasn't readily accessible. The person that I was working with, it took her a day or two to, find whomever she needed to talk to get a copy of that. And
Mhm.
it can be really overwhelming when you get sent that from those insurance companies because it's full of this kind of legal jargon and they can tend to be very lengthy with multiple different sections, and it's easy for like people's eyes to just glaze over and feel like it's kind of like the fine print on like a privacy policy for a website or whatever,
Mm.
or
Mhm.
whoever clicks in and reads that. But in this case, when you're buying insurance, it's really scary to think that you're going to be buying something this important and not really know what you're buying, because there's so many important things in the fine print, as it were, or within those pages, that you really have to take the time to read it, and at the bare minimum skim important sections. But like you said, terminology, we don't want people's, like I said, to their eyes to glaze over, or for them to kind of drop off the conversation here. But give us kind of the most important terms that we need to understand as we start trying to
Yeah.
get an idea of what this policy actually has in it.
Yeah, this is what makes insurance very interesting to myself, and interesting to someone like yourself too, who likes to investigate it a little bit. Once you kind of understand the basic nuances of it, it becomes extremely simple. So insurance fundamentally breaks down into three parts. Okay, so you have homeowners insurance, or HO. You have landlord insurance, or DP, as it's typically written on the form, or dwelling policy. And then you have commercial policies, or CPP, right? And each of those, one of those three contracts, they have three general coverage types. You have HO1, which is basic form, that is bad. You have HO2, which is a broad form, which is better. And then you have HO3, which is the best. And the same works on the DP and the commercial style policies: DP1, DP2, TP3, with the three being the best. And then on the commercial, it's 10, 10, 10, 20, 10, 30. But they all, for the most part, mean the same thing. You want that three, because that is now what's called special form all risk, which is an exclusion based policy. So it just tells you what is not covered. It is the broadest form of protection you can get on any property. So you want that three, right? And then you have three different types of liability coverage that are specific to those forms. So HO form is personal liability, because it's meant for your primary residence that you live in full time. And then you have a landlord policy, which has what's called premises liability, and that's meant to cover the liability on the property line. And then you have commercial liability, which is the most broadest form of liability protection out there. And in my opinion, the best for short term rentals, because it has the fewest exclusions, and it has, in terms of the coverage territory of the liability, it's not just limited to your property line, nor is it there just for your personal stuff, right? So those are important things to know to dissertate, because when you do get those 2 pages, right, and you look at it and you're looking at this form and you go, it says HO3 with personal liability, but it's not my primary residence. Right now off the bat, that is the wrong insurance policy. You got the wrong quote, and you need to dive deeper into that. Okay. Other things to um, really see and know on these 2-page proposals is replacement cost versus actual cash value. Okay. And so replacement cost is RCV, and then actual cash value is ACV. Replacement cost is the best. And most of these special form, all risk, the threes, right? They're going to be on special replacement cost valuation. Okay. And that means new for old. So we're replacing the goods for new and like kind. We're not paying a depreciated value. The actual cash value is going to be depreciated value. So you have a 70-inch screen TV in your property and you paid $5,000 for it, top of the line television. But in 2 years' time, when it becomes damaged, what is the actual cash value? Maybe $1,000, right? That's where actual cash value is a massive limitation, because they're only going to pay you that $1,000. Basically, what is it worth on Facebook Marketplace? The most common place that we see actual cash value is on roofs. And most insurance carriers are doing actual cash value on a roof. With the increased cost of construction, that's a question you want to ask. Do I have RCV, or replacement cost, on my roof, or is it ACV? And then same with your contents, and same with your appliances and other things within the home. Those are going to be the standard terms, right? There's a lot more stuff in there. There's loss settlement, there's co-insurance, there's certain types of liability exclusions around this or that, communicable disease, punitive damages, and things like that. That is stuff we can get into later, but those are going to be our basics. One thing you'll hear me throughout this conversation reference to is retail market. Um, the retail market is going to be your standard insurance carriers, your State Farms, your Allstates, your Nationwides, the ones who advertise on the Super Bowl. That's when I say retail market, I am putting them in that general box.
Okay. So I appreciate that you kind of called out the difference between the cash value versus the replacement value, because I actually had an experience reading through. I was switching policies on a property and I was reading through it, and literally, like, I had the contracts printed out and I was comparing the sections kind of side by side. And that was the first time that I realized that difference in the way, the payout basically on those the way that the insurance companies can do it. And then interestingly enough, my husband and I have a home warranty on our private residence, and we switched companies, and I didn't realize that this was where I got burned. I didn't realize that that company that we switched to did that actual cash value thing. And we had, in our case, it was a pool heater, like random. We had a pool heater that went out, and they're like, oh, that pool heater was X number of years old. So the payout was like ridiculous. We weren't able to actually replace the broken pool heater with what they paid us. And so that was kind
Yeah.
of when I learned that you really have to know, because it's when you have finally a claim, that is not the time when you want to find out that you have the cash value as opposed to the replacement value on your insurance.
Yeah. The only time you want an actual cash value settlement, and this is just for all insurance, this isn't short term specific, but is on an appreciating item. Okay. So, as much as real estate appreciates, the material used to build your home depreciates, right? Market value is the appreciating factor in your equity, not that my roof is 20 years old doesn't mean it went up 10, 15%, right? So, like, on your regular home insurance, if you're using this information that you're learning to just look at your regular home policy, and you have another term as a rider, right? You can add things and schedule certain property. So, like works of art, you want actual cash value. Expensive jewelry, a Rolex watch, a collection of sorts, you want actual cash value, because from when you purchased that item to when it was damaged, lost, or stolen, you want the cost of that appreciation. So that's when actual cash value is a good thing. But in the terms of the general functionality of our homes, it's not a good thing. You will get paid. In some cases, it could be pennies on the dollar, and now you're out of pocket way, way more than you thought your deductible was, and that's going to create some problems for you financially.
Yeah. So I want to ask you a question about dwelling coverage. And again, this is based on a personal experience that I had. So I bought a short-term rental property in a beach market. And when I was getting the initial policy to cover this, what they offered me as far as dwelling coverage, I felt like wouldn't be enough to actually rebuild that home if a hurricane came through or whatnot.
Hmm.
Um, and I know that, what you select for your dwelling coverage can really move the needle as far as what that premium is. And so there may be people who are like willing to err on the lower side of that dwelling coverage versus me, where I was like, I actually want that dwelling coverage higher, because if I did have a catastrophic loss, a total loss because of a hurricane, I want to actually be able to rebuild this home. So
Hmm.
what's going on there with that dwelling coverage?
Yeah, it's actually kind of one of the biggest sticking points. So, dwelling coverage is going to be the primary derivative of your premium in 99% of insurance policies. It's what they're going to collect the most amount of premium on that risk transfer. Outside of liability, it's the biggest exposure to the insurance company. Total loss fire, they're on the hook for hundreds and hundreds and hundreds of thousands to rebuild. So, one of the biggest things to take away here, if you haven't looked at your insurance policy in a couple of years, chances are you're grossly underinsured. In fact, studies show that roughly 80% of homeowners in the US are underinsured by 30 or more percent for actual replacement value of their home. And that's exasperated even more over the last 2 years as the US average increase in cost of construction has gone up over 40%. So if you haven't looked at that number in a while, it's time to look at that number. Okay. I generally tell people when I'm doing a quote and I use cost estimators and we come up and they're not perfect. And I say, okay, you need in this market, I'm showing you need to be $350 a square foot. And let's just say that comes out to 500,000. Whatever I'm telling you, you should probably add 10 to 15% to that number because cost estimators are not perfect. They're exactly that, an estimator. So when you're looking at that building value, you're going to look at your policy and it's going to say usually coverage A is what it shows. And then it'll say, let's say it says 500,000. Now, down further, depending on the policy that you have, you might have another coverage line item that says extended replacement cost or extended dwelling limit. Different companies call them different things, and it's a percentage. And it might be 10%, it might be 25%. Some are 50%. So my homeowner's insurance policy through Allstate is 50% extended replacement cost. So now that $500,000 value, if that 500,000 is depleted in a total loss, I have up to another 250,000 for the replacement of my home. Now, Allstate's a retail market policy in terms of short-term rentals. That is not the right policy if I was short-term renting my house. So, it's super important to look at that dwelling limit. Um, every carrier does their own cost estimators, and again, they're not perfect. If you really don't know and you really want to dive deep, it's worth having a phone call with a contractor. They're going to have the best knowledge source locally on what you should probably insure your property for, and then moving forward, you need to check that limit every single year. Every year, you need to be looking at that number and make sure you're still comfortable because worst case scenario, place burns down. Are you liquid enough to spend an extra 150,000 out of pocket if you don't have the right dwelling limit? So that is a massive, massive part of this.
Yeah. And okay, so I feel like another really important section for people to be looking at is that exclusion section. And like you
Mhm.
said, I'm going to paraphrase. You did a much better job of me of explaining this, but basically there are some policies are written so that it only covers the things that are specifically spelled out or identified, whereas there's
Mhm.
other policies that they cover everything except for the few exclusions that are called out. And that's a huge difference as far as what you could be covered for.
Oh, it's giant. So you don't really see basic foreign policies anymore, primarily because most of the U.S. Has a mortgage and lenders won't allow it. So you generally see the special form, but you see what's called broad form coverage on the personal property or the contents, all of your furniture. And what that broad form means is they just list 16 perils. And if it's not one of those 16 perils, you don't have coverage for it. Right. And so those perils are things like fire and lightning and certain facets of water damage, sometimes, theft and things like that. Somebody breaks into your house. But it doesn't call out a named peril is not spillage, right? If somebody spills a bucket of paint all over your nice furniture and you got to replace it, it's not covered on broad form. You're out of pocket on that. So when you move into special form all risk, it not only covers all of those same 16 perils because none of those are listed as an exclusion, it covers everything else that's not excluded. So, what are some general exclusions that no insurance company, I don't care who you buy insurance from, is not going to cover? Well, the big one is wear and tear. Homes have wear and tear, especially rental properties. Every 5 to 10 years, you're going to have to replace your carpet. You're going to have to paint the walls. You're going to have to buy new appliances because they wear out. It's wear and tear. Your roof gets old. It's if there's not a sudden and accidental occurrence that caused the damage, it's generally wear and tear, and it's part of home ownership, right? So that's like a standard type exclusion. Other exclusions are going to be things like war, terrorism, government intervention if they need to seize your house because of something, right? That's just not covered. You see exclusions out there in most insurance policies around like seepage and leakage of water, right? And that kind of
Earth
correlates,
movement, that's another
yeah,
one that's
earth
very
movement
mhm.
and flood, right? So, earth movement, i.e., earthquake, and flood, not flood being like the power went out and the pipes froze and my house flooded, but the river rose. There's a tidal surge in Florida, this type of stuff. That's like flood's going to be FEMA, and then earth movement is going to be an earthquake policy. So if you're in those types of regions, you need to have three insurances: your home policy, your flood policy, and your earthquake policy.
Yeah, and you know what was interesting? So I'm going to go back to this St. Beach property that I had. I was actually talking to my neighbor who owns the property next door, and he was saying that they had an earthquake years ago, and when the waves came in and pushed the sand and moved the dunes and all these things, the pilings that the house was sitting on were like skewed, and some were higher than the other, and they had to kind of lift the house and reset all of those pilings, and his insurance did not cover that. The
Mm-mm.
insurance company considered that earth movement. And
Yeah.
so, I mean, think broader than just an earthquake. There may be other things that could cause what an insurance company might classify as earth movement. And so,
Yeah, and
that
like
could potentially be
foundations.
you.
Yeah, and foundations too. I mean, we get those calls from time to time, and it's an older house and it's settled and the foundation is cracking and stuff like that. And no insurance company is gonna cover that as a cause of loss because that happens over a very extended period of time. Another one is wet rot, right? Like,
Mm.
and that's where, folks would be like, "Oh, I gotta replace my deck because it's rotting." It's like, well, it's outside in the elements. That's part of homeownership. These things happen. If you think your insurance is expensive now, imagine if we covered all of that, right? I mean, it would be unattainable for most folks.
Right, right. So, um, I was surprised the last time I went around the block as well about my insurance coverage, about that there's a conversation that can happen. I noticed that in this policy, it didn't cover, I mean, the easy term is mold, but it had some like microbial fungi, like some like
Mhm.
very insurancy term for mold. And knowing in my beach environment that, yeah, it's super humid and there's always moisture in the air, I actually went back to the company and said, I see that that's an exclusion. Is there potentially any coverage available that I could, add to this policy? And I was
Yep.
surprised when they said, yeah, actually we can. They had a limit. I can't remember what it was. It was like five or $10,000. It wasn't a huge
Mhm.
amount, but it added like $30 to my premium. It really was not that expensive. And I was so
Yeah.
glad that I'd asked because, yeah, if I did have a mold issue, yes, I will take your $10,000 to help me
Y
mediate my mold issue.
Yeah, yeah, and so you can add again back to the term rider, and another term might be enhancement. So in that case, for mold coverage, and fungi is an enhancement. And yeah, the general thing with insurance is you have standardized forms through what's called ISO. So they just grab that ISO form and what it covers and then charge you for it. So you can do mold. Usually it's five or $10,000. It is heavily limited in coverage, but you can get that from some companies. You also have things for like service line coverage. You have equipment breakdown is another one you can add on. And generally in the retail markets for a regular homeowner's policy, it's fairly inexpensive because what's their risk, right? If you live in that property full time and you open up the cabinet underneath the sink and see some mold growing, okay, you're going to spray it down and clean it. You're not going to call in and file an insurance claim. So that's where those enhancements can be relatively inexpensive. When you segue into short-term rentals specifically, when you're looking at short-term specific policies, they generally aren't going to cover that or actually allow you to have that additional protection. And the reason is because these properties are cleaned routinely. So same thing, your cleaner's in there going around and finds a little bit of mold, they're gonna take care of it, or it's gonna get taken care of before it becomes a big thing. And then again, you go into this, how long has it been there? If it's been there a long time, chances are that even that enhancement is not going to respond to it, because they will probably call it more negligence on your part as a homeowner for not taking care of that in a timely manner. So those are things to look out for. I mean, you can definitely add them to your policy, but short-term rental specific, usually it's not necessary, and a lot of the companies playing in my realm actually won't offer it.
So ask and then read the fine print, right?
Absolutely,
That's
absolutely.
the That's one of the key takeaways of this show today. So,
Yeah,
policies are huge. You may get all of the fine print and just be overwhelmed. Is there anything that we're allowed to skim? Like, is there anything that you can be like, okay, when you're staring down like 50 to 60 pages of insurance contract stuff, make sure you read
yeah,
this section. Make sure you read this section. But you know what? Once you get here, skim, skim, skim. Move on.
yeah. The most important pages are going to be the cause of loss form. So you're going to have a deck page, you're going to have privacy notices, you're going to have state rules, you're going to have, this or that from the carrier in the beginning. You can thumb through those. You're going to get to a conditions page. The conditions page is just going to talk about, how claims are handled, what you need to do, kind of what each other's responsibility with the contract is. Um, you're also going to see a definitions page. That is an important one because it's going to define terms in the policy so you understand what they mean by that term. So like a big one is residence premises that we see when I'm competing against a policy, or I shouldn't say competing, but doing the consultation and saying, here's where this particular product might have some gaps in coverage. And the first thing I'm looking for when you send me that 50 to 100 pages is the definitions. I want to know how that policy is defining certain things. So if they're defining business activity, how do they define business activity? Generally, it's $2,000 or more in active income unless the property is rented as a residence. Okay, what does residence mean? So then I go and find residence. Residence means a 1 to 4 family home that is rented basically full time to 2 or more roomers or boarders. Right then and there, I know, okay, we're defining that this is kind of meant maybe for long-term rentals, and maybe further down we'll find an enhancement or endorsement around short-term stays, and that'll be towards the back of the policy. But as I'm thumbing through, I'm going to find the cause of loss form. And that cause of loss form is going to come right out, and it's going to tell me either we cover everything except what's excluded. I'm paraphrasing. And then it's going to list those exclusions with their definition. If this happens, if that happens, we don't cover XYZ. Unless it results in this, then we'll respond to that. That's what you want to read through and understand, right? And then you get to a liability section. The liability sections are usually generally pretty short, but that's going to outline what is and what is not covered from a liability standpoint. And then as you start getting to the back of the contract is when you're going to start seeing endorsements. And those endorsements can either enhance coverage by giving you more protection or remove some of the protections. Okay. So you might read through the liability exclusions and go, oh, they don't really exclude that much. That's great. But then you start getting back there and you go, oh, now I have a recreational activity exclusion. I have a swimming pool exclusion. I have an animal and pet exclusion. And so that's removing coverage, right?
Mhm.
Or you have enhancements that say we cover watercraft liability, but only these types of watercraft, right? And that's going to outline and specifically tell you what you may and may not be able to offer at your property. So one of the big things for everybody to know, as a consumer, one of your rights as the consumer is to request a copy of the policy you're being quoted. So anybody can call the agent they got a quote from, or call the number on the top of the quote for the carrier and request a full copy of that policy. And that's how you're going to start and go through this. Now, the other thing I like to tell folks is the first time, if you want to read that cover to cover, I highly encourage it. The first time you read it, you are going to be brain dead. The second time you read it, it starts making sense. By the time the third time you read that, you will probably know more about that insurance contract than the person selling it to you.
I believe that. And yeah, it is. It's not easy, but
No.
it's worth it. And actually, my experience when I started reading my policies for the very first time is it was kind of slow and laborious, but then like I started to get, I don't want to say nervous, but it's the sense of holy cow. I really had no idea what was in here. And so it's this sense of this is super important. How did I not pay attention to
Mhm.
this until now? And so I guess it kind of put the fear in me in the sense that if I don't know what is in this insurance contract, then I literally have no idea what kind of coverage I have.
Yeah, I mean, what one of the number one amenities at short-term rentals is a hot tub.
Mm.
And so you start thumbing through that sample policy and you see a communicable disease exclusion, you got problems. I mean, hot tub folliculitis is a big deal. And if somebody gets a bacterial infection from the hot tub, you have no coverage. If they sue you, you're on your own, right? So those are things you got to look out for. Or if you're pet friendly, make sure you're going through and you don't have limitations on dog bites and stuff like that. Even if you're not pet friendly, people still sneak dogs in. So depending on how much you want to limit that exposure, that's a big one, especially with the increased popularity of pet friendly properties in the STR space.
Yeah. Well, hey, that was the perfect teaser for part 2 of our,
Yeah, we'll
podcast
get into more
series
of that.
here.
Oh yeah.
Yeah. More where that came from as far as there's actually a number of really specialized coverages and different
Hmm.
things that, you should be looking into and considering whether they're, important for you to add to your policies or make sure are included with your policies when you are running a short-term rental. So,
Yeah.
um, here's the key takeaways, folks. Make sure when you are shopping for your insurance for your properties, you need to make sure that you're getting quotes from from a few companies, right? You have the right, as Nick just said, to ask for basically what that policy is, all the details on that policy. What's the term for it? What's the technical term we
Yeah,
say?
you just say I want a sample policy of what you're quoting me
Okay.
with everything. I want the full thing.
Okay. So speak up, ask for that, be patient. Then when you get it, kind of look over those sections specifically that Nick mentioned and familiarize yourself with what's in that policy. And, over the course of the conversation, you've got a sense of some things to be looking out for. I believe that just from listening to today's show, you're going to be way ahead of most people when they stare down their first insurance policy as far as
Hmm.
reading through it. So,
Yeah.
I hope you have the patience and take the time to do this because it's really so important. And it's not a one and done. Like Nick was saying, you need to revisit your insurance coverage annually, making sure that the coverage that you have in place adequately suits the intended use of the property. And you may have added amenities since the last time, you really had a hard look at your property. So look at your dwelling coverage amount, look at, what types of things you have in your property now, and really make sure you have the right coverage. So thank you for joining us on today's episode. Like I said, Nick and I are going to keep having this conversation, and we're going to bring you additional information on next week's show where we're specifically going to be diving into the types of coverage that short-term rental property owners should be considering. Nick, thank you so much for being here with us today.
Absolutely. Yeah, thanks for having me.
Nick, tell us how people can get in contact with you and Proper.
Yeah, best thing to do is hit the internet, and you can go to our website www.proper.insure. It's insure. There's no .com, just proper.insure. And we also dominate Google pretty good. So if you do short-term rental or Airbnb insurance, we'll probably pop up pretty quickly. Just kind of feel free to go through our website. So much information on there that we've put out in blogs and other content that really dives deep into these concepts. You can also just click the link to get a quote, send us in some simple property information, and we'll be quick to give you a call and go through a consultation. Whether you end up wanting to work with us or not, I promise you'll learn something at the end of the phone call.
Yes. And I have had a chance to go through the quoting process with Proper, and I can say that their team are very professional and they are more than happy to answer any questions that you may have as you're trying to figure out whether a proper policy is potentially right for you and your property. So I would definitely say it's well worth your time to reach out to them, and we'll make sure we have all that contact information in the show notes to make it super easy. But we also have information about Proper and other options found on our website at strhub.com. So make sure you go over there. And, thank you again, Nick. So glad that we had a chance to have you on the show today.
Yeah, absolutely. Thanks for having me.